On the Thursday session on Wall Street, we had a day of red on the screen for most of it. This after PPI, Producer Price Index, the wholesale inflation figure, came out, and it was hotter than expected. It was warmer than expected, put it that way, at 0.4%, not 0.2%, which had been expected. However, you strip out food and energy, and you get the core, and that was at 0.2% up in November, and that's exactly where it was supposed to be, according to the economists. So put that together with CPI from Wednesday, and you have nothing that's going to dissuade the Federal Reserve, I think, from cutting interest rates next week when they have to make that decision. We're expecting a 25 basis point cut, but then when we get into 2025, I expect there will be some pausing of this particular issue going on, and a good time to begin pausing might be when they meet in January, which will be 9 days after President Trump's inauguration. And that's kind of important, because if they pause then, it'll make sense, because of course we won't know what his policies will be by then, or we'll only just be learning about them then. So we're in this sort of interregnum period, which goes on until, I don't know, probably the first 100 days after he's sworn in. Anyway, let's have a look at the markets. Dow down 0.5%, NASDAQ down 0.7%, and the S&P 500 down by 0.5%. And on Friday, we look forward to Friday now, and it's import and export prices, the two big pieces of data that will be published later today. John Terrett, CGTN, on the trading floor of the New York Stock Exchange.